Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, my friend, great to see you.
Thanks for having me. How you doing?
I'm good. I'm in Texas. I'm in Austin, Texas. You are not in the office either, so this is one of our rare remote meetings. But it's good to see you. I like those glasses.
Thank you. Thank you so much. I'm a little under the weather right now. I'm sure you guys can hear.
So, but we never miss a quick update with BIMNet. And just for our listeners, some of the rest of this episode was previously recorded. That's why you'll see me in the studio with our guest Nick Hansen after this segment. But Bim, let's get into it. It's we're recording. It's Wednesday, April 26th. Couple things to bring up. The one that struck me the most was waking up this morning and seeing Bitcoin basically regaining 30K. It's trading slightly below 29.8. No block clock behind me to show it right now, but it's a significant move up from where we were in the low 27s. What's going on in markets today?
A lot of market volatility has recently been driven by concerns surrounding a regional bank, one in particular, First Republic. They had reported quarterly earnings earlier this week, and it showed that they had lost about $100 billion in deposits. At their peak, I believe, they were a $200 billion deposit institution and I think roughly a $40 billion market cap institution. And now, since the earnings, we've seen their stock pretty much collapse to roughly a 1 billion market cap. And that's all around, the idea that there is really no bailout coming, or headlines about whether or not there is a bailout coming or there isn't. There was a headline out earlier this morning saying that the government doesn't want to intervene in this situation. And so it's basically going to be up to the market to kind of figure out, what they're going to do with this institution. And as a reminder to folks, this is an institution that basically has made a ton of has a lot of long duration assets on its balance sheet and a lot of short dated liabilities. And so, just a fundamental, balance sheet mismanagement situation that.
Yeah, this is one of those banks
Yep.
that was teetering ever since Silicon Valley Bank, right? I mean, it's sort of been, they had the injection from the GSIBs. The big banks just agreed. I'm sure there was some cajoling, but they agreed to deposit $30 billion there to shore up the balance sheet. But it seems like it's been sort of a dead man walking at this point.
Exactly. And so now the market is trying to look ahead as to, what a potential solution looks like for this bank, and what are the kind of implications, more broadly for the rest of the regional banks. And, kind of the main thing, that sticks out in my head is, there's an implicit guarantee right now for the main GSIB banks, right? Like, they are definitely too big to fail. And if you go back to, what Secretary Yellen and other folks were saying, right around the time of Silicon Valley and Signature, depositors are generally safe. And so the question is, like, how should somebody, with large pools of money, be thinking about, where to park their assets? Are regional banks safe? Or, is there a guarantee above, the 250K number that the FDIC has provided, et cetera? And so, more and more, the conclusion that we've come to here is that, you're kind of setting up a situation where essentially all depositors are guaranteed, and you're going to essentially move to a marketplace for deposits that's incredibly competitive, and you're going to have a situation where credit is going to meaningfully tighten, because one, just think about like First Republic Bank. They are going to have to offload $100 billion worth of long duration assets into the marketplace. And so some bank or some institution has to buy, those assets. And so when you have assets that are going to maybe trade at a discount, et cetera, like, what's your real incentive to go extend credit when there's all these like distressed sales of banks and bank assets, et cetera, and you're just going to be losing reserves over time as TGA balances pick up, as QT, moves forward, 100 billion per month, et cetera. You're going to be losing deposits over time as well. So there's really a very dynamic set of circumstances that are at play here with the banking system. And the market yesterday got very worried about sort of a left tail scenario where you have, banking stresses combined with, souring economic data combined with a Fed that is most likely going to hike in on May 3rd, right? And basically a week from now. And so, what you had happen was a huge rally in front end duration. And you actually saw, May meeting, pricing move down a lot, but you had, certain parts of the U.S. front end curve moving by 30 basis points. You had gold breaking through 2K as folks, sort of got concerned, and so. There's a flight to quality, and that kind of helped Bitcoin a little bit because it was able to recapture the story that had, driven so much of the performance this year, which is, a failing banking system, right? The move from 20K to 28K in Bitcoin was largely off the back of, Silicon Valley Bank's failure, and the sort of, apparentness of the need for Bitcoin in moments like those. And so you had a little bit of that narrative come back into the market when you were in technically oversold conditions. I would say there was a large Binance TWAP seller, last week that had kind of artificially, depressed prices. You were at support around 27K in Bitcoin. And the move higher happened in a low liquidity window, which is sort of U.S. afternoon session, and so you had liquidations, a little bit of a short gamma squeeze. You had actual buyers come in because of a change in the narrative, and all of a sudden Bitcoin goes from 27,300 to 30,000 in the span of 12 hours, and so it's a
Hmm.
pretty dramatic move. I didn't anticipate a move of this magnitude. I did think that another bank potentially failing or rumors around another potential failure was going to help Bitcoin, but the magnitude of this move has definitely caught me a little bit off guard. It's just so quick.
Yeah, I was taken aback a little bit too when like I said, I woke up this morning too, and it really had started to pump all the way to 30K. But look, I guess the corn and is going to do what it's going to do. The only other thing I'd mention is, you know, pretty impressive to see Bitcoin still leading this rally, which is what it did, particularly post Shanghai. It kind of felt like March was the banking narrative, and then April came Shanghai for ETH, and you'd think ETH would then be in the driver's seat. But I guess maybe like you're saying, the banking narrative here is playing a factor still. People are still Argentina central bank appeared to have plundered retail bank accounts in order to get dollars. I feel like that was almost a little bit of a Cyprus moment, a bail-in moment that also felt like a Bitcoin kind of buoyant narrative. But things are looking pretty strong.
No, absolutely. I mean, the stories and the cases for Bitcoin are all around us. And I think, folks in the West, it's become more apparent recently because you had, historically like stable institutions failing. So it became, more apparent. But for somebody in EM, like Bitcoin's a story that plays every day, right? Hyperinflation is an issue that is present every day. Capital controls and people's dollar bank accounts, not having access to them, or awful exchange rates. That's a story that plays every day in EM. And so I think getting the focus of the U.S. is super important, to driving it, but it's not necessary. And a lot
Hmm.
of what you saw earlier this year was a Bitcoin rally that was driven by largely non-U.S. folks. If you just looked at the sort of performance of Bitcoin in certain regions, and so I try to take a step back and try to think critically about kind of what are the global forces shaping Bitcoin, and there are just so many each and every day. So that's why I'm still constructive on it. It's technically speaking, it is respecting trends like unbelievably well. Like Bitcoin had 10% drawdown and it got bought, and now you're back at 30K, and it's been setting higher highs and higher lows. It's an asset that is clearly trending. The dollar de-dollarization story is not going away anytime soon. I mean, there are headlines literally every day about BRICS and new nations try to join, Russia, China, trade developments, gold, gaining more prominence. There are these constructive developments literally every day. And so, I think that's why you're seeing this asset, trend really well. And the last thing I'll leave you guys with, I think the story of adoption really, in terms of when it kicks into the next gear, is once you get like major institutional adoption again, or at least once you start to see more money flowing in. And today, the CME CEO was on CNBC talking about Bitcoin CME volumes and ETH volumes, etc. And the one thing he noted and wanted to stress about his crypto products was that the large versions of his crypto products are the ones that are doing the best in terms of the ones that are picking up the most traction, right? And so he's saying there's a bifurcation between retail and institutional, and he's seeing institutional grow more and more. And when he went out to London recently, he said the amount of activity and the buzz around it was super compelling, and he sees it as a product he's going to perpetually essentially be offering. And so I think there's just all sorts of constructive stories at play. It's an asset that's trending higher.
Bimnet Abibi from Galaxy Trading, as always, my friend. Thank you so much.